In the Union Budget for FY25, the Finance Minister mentioned urban development as a key priority, and housing is an integral part of urban development. Now, under the PM Awas Yojana Urban 2.0, an investment of 10 lakh crore has been proposed to fulfill the housing needs of 1 crore urban poor and middle class families. This makes housing a hot theme, which we discussed in a recent video. Now, one way of profiting from the housing theme is to bet on housing finance companies. Now, until July 2023, HDFC Limited was the big daddy of the sector, but then it merged with HDFC Bank. Now, more than a year later, another big housing finance company is set to debut on the stock exchanges. The company is Bajaj Housing Finance. The IPO opens on 9th September and closes on September 11th. At the upper price band, Bajaj Housing Finance will have a market cap of over 58,000 crore. This makes it the largest housing finance company in India in terms of market cap. Now, Bajaj Housing is raising around 6,500 crores, which makes it the biggest IPO in 2024 so far by issue size. So, should you invest in this IPO before or after listing? This video will help you decide that. But before I start, something important. Successful IPO investing requires not just analysis, but also knowing some secret IPO hacks. We discussed them in a video earlier. So after you have watched this video, do watch that one as well. Now, I've divided this video in certain sections which are on your screen. Let's start with understanding Bajaj Housing Finance's business. Headquartered in Pune, Bajaj Housing Finance is a non-deposit taking housing finance company. It started its operation only in FY18, so it's a relatively new company in the sector. Now, in terms of its AUM, with an AUM of over 97,000 crore, it is the second largest housing finance company in India after LIC Housing Finance, whose AUM stands at 2.89 lakh crore. Now, Bajaj Housing Finance is a 100% subsidiary of Bajaj Finance, which is already a listed NBFC with a market cap of 4.58 lakh crore and assets of 3.76 lakh crore as of June 2024. Now, Bajaj Housing Finance deals in home loans, loans against property, lease rental discounting and developer financing. Lease rental discounting is a loan offered on rent generating properties. Now, as of June 2024, about 58% of the company's AUM was home loans, followed by lease rental discounting loans of 20%. Now, the company has direct and indirect channels for the origination of its loans. Under its direct channel, it generates business through strategic partnership with developers, direct customer engagement, and digital channels. Under its indirect channel, it gets business through a distribution network of intermediaries such as channel partners, aggregators, direct selling agents, and third-party agents. Now, since this company doesn't accept deposits, it relies on external sources for its fund requirements. As of June 2024, 47% of the company's borrowings originated from banks and 38% through NCDs. The company enjoys the highest credit rating, CRISIL AAA and CRISIL A1+ for both its long-term and short-term borrowings. This allows it to borrow funds at competitive rates. Alright, let's now take a look at the industry outlook. The growth of housing is directly connected to the growth in the economy, and this puts Bajaj Housing Finance in a sweet spot. India is expected to be one of the fastest growing economies for the years to come. In projected terms, the economy is expected to grow by 6.8% in FY25. Until FY29, the projected growth rate is expected to be in the 6 to 7% range. Now, repo rates, which directly influence the rate of interest to be paid on home loans, have remained stable in India over the last few quarters. As inflation moderates, they can very well fall as well. This is expected to boost demand for home loans. Now, many government initiatives are also providing tailwinds for the housing industry. This includes the estimated 11.1 lakh crore capital expenditure by the government in FY25. Also, 2.2 lakh crore have been allocated to major rural schemes such as PM Kisan Samman Nidhi, Manrega, PM Gram Sadak Yojana and PM Awas Yojana Rural. This is 12.6% higher as compared to FY24 allocation. Plus, as we saw at the start of this video, under the PM Awas Yojana Urban 2.0, an investment of 10 lakh crore has been proposed to fulfill the housing needs of 1 crore urban poor and middle class families. Now, Other key growth drivers include India's population, which is the largest in the world and is expected to keep growing, a rising share of the urban population as a percentage of the total population, a rising GDP per capita. A low percentage of the population borrows from the formal sources, so it is expected to rise. Indians prefer physical assets as savings avenues over financial assets, and so on. So, the housing industry does seem to be quite well placed. If you would like to know more about the sectors and stocks that will benefit from the housing theme, you can watch our video on the stocks for the next 5 years. The link is in the description. Alright, let's move on to the company's financials now. Let's first check the revenue and profit growth. Bajaj Housing Finance has had stellar revenue and profit growth of 42% and 56% per annum over the last 2 years. Let's compare it with the revenue and profit growth of the top 3 listed housing finance companies by revenues. Bajaj Housing Finance does better than its peers, but note that even the peers' growth rate are quite attractive. That's again a testament of the growth potential in this industry. Next, let's check the return on equity of Bajaj Housing Finance versus its peers. Now, Bajaj Housing Finance is ahead of LIC Housing and PNB Housing, but it lags behind Canfin Homes. Next comes net interest margins or NIM. Net interest margin is the equivalent of profit margin for finance companies. The higher the NIM, the better. Here also, Bajaj Housing Finance does well. Only PNB Housing Finance matches its NIM. Next, let's check the bad loan picture of Bajaj Housing vis-a-vis its peers. The lower the bad loans, the better. Here, Bajaj Housing does significantly better than its peers, especially LIC Housing Finance, whose gross non-performing assets are over 3%. So overall, key financials suggest that Bajaj Housing is fundamentally quite strong, but fundamental strength alone doesn't guarantee success in the stock market. Valuations matter too. So let's check Bajaj Housing's valuation vis-a-vis its peers. For finance companies, the price to book ratio or the PB ratio is the go-to measure to assess valuations. It is derived by dividing the stock price by the book value per share. Now, as of June 2024, Bajaj Housing's book value per share is 18.8. At the upper price band of 70, the PB ratio comes out to be 3.72. Now, let's compare this with the PB ratios of its listed peers. Bajaj Housing Finance has a steeper valuation as compared to its peers and the industry median. Let's check some key IPO details now. But before that, let me ask you to subscribe to this channel if you aren't already a subscriber. And don't forget to press the bell icon so you never miss a video from us. On your screen are the key details of the Bajaj Housing Finance IPO. The total IPO size of Bajaj Housing Finance is 6,560 crores, which makes it the largest IPO of 2024 by issue size. The second position comes Ola Electric, which raised 61,000 crores in August 2024. Now, the IPO comprises both a fresh issue as well as an offer for sale or OFS. In a fresh issue, new shares are issued, and in an OFS, existing shareholders sell their stake. If an IPO is just OFS, you should be careful as the company is not going to benefit from it. On the contrary, its existing shareholders are parting with their stake, so that requires some scrutiny. Now, the existing shareholder selling the stake in the OFS is the promoter of Bajaj Finance itself. The IPO opens on 9th September and closes on 11th September, as we discussed at the start of the video. The IPO price band is 66 to 70. If you apply for this IPO and want to increase your chances of getting an allotment, you should apply at the cutoff price or the upper price band. The minimum investment by a retail investor in this IPO is about 15,000 rupees. The total shareholding pre-issue is 780 crore shares. It will increase to 833 crore shares post the IPO. That's the change of 51 crore shares. Now, there is also a quota for the shareholders of Bajaj Finance and Bajaj Finserv in this IPO. Under this quota, a shareholder can make an application of a maximum of 2 lakh. Alright, let's now try to evaluate this IPO through some critical IPO-related criteria. We discussed this in our video on how to analyze IPOs, so do watch that video for more details. The first is the fresh issue versus OFS. Now, this IPO has both in the ratio of 54% to 46%. The significant OFS portion indicates that apart from raising capital for the company, the promoter is also looking at monetary benefits for itself. The second is the use of IPO proceeds. Now, the OFS proceeds will go to Bajaj Finance, and the stated reason for the proceeds from the fresh issue is to meet the future business requirements of Bajaj Housing Finance. Now, that's fair enough. Now, one should be cautious if IPO proceeds are meant only for managing a crisis such as debt repayment. It's good when IPO proceeds will be used for business growth. The third criteria is if the company has issued shares in the past that are below the IPO price. Now, Bajaj Finance, the promoter, has acquired 111 crore shares in Bajaj Housing Finance in the last year at the weighted average price of 18.1. That's far below the IPO price band of 66 to 70. In fact, the IPO price is almost 4 times higher than the acquisition price. That's a potential red flag. Secondly, the promoter itself is selling about 43 crore shares via the OFS when it acquired 111 crore shares in the last year. That might hint at opportunistic behavior on the part of the promoter, given that the Indian stock market is booming. The next criteria is litigations against the company and promoters. Against the company, there are litigations involving an amount of 24 crores. Against the promoters, Bajaj Finance and Bajaj Finserv, the amount is staggering 4,171 crores. There are 23 criminal proceedings against the company and 47 against the promoters going on. This could be a sign of worry. Fortunately, contingent liabilities against the company are quite low at just 4 crores. A contingent liability is a possible obligation that may or may not occur depending on a future event. So low to nil contingent liabilities are a good thing. Let's also see some of the key risk factors mentioned by the company in its RHP. There are as many as 76 risk factors mentioned by the company in its RHP, but most of them are kind of disclaimers. A few do stand out though. These include the company's AUM is concentrated in just 4 states and the Union Territory of New Delhi, and any adverse development in these regions can have adverse impact on the business. The company has admitted that it has issued shares to its promoters in FY23 at a price lower than the IPO issue price. The company mentions the litigations against it and its promoters as a matter of concern. The company's promoters, promoter group entities, group companies, and directors are engaged in business similar to the company's business, and hence it can lead to a conflict of interest. The company's loans are concentrated on certain customers. Its top 10 customers account for 6.2% of its loans. You can read the list of full 76 risk factors in the company's RHP. Okay, so given all this information, should you invest in Bajaj Finance IPO? Let's see. Rapid growth, fundamental strength, and a promising industry are all positives for Bajaj Housing Finance. But the biggest plus is the Bajaj parentage. The Bajaj Group is among India's biggest and most reputed business groups and has multiple wealth creating companies. The strength of its promoters and the group sets Bajaj Housing Finance apart from the rest in its industry. But the IPO seems to have an opportunistic bet too. The promoters are selling the stake at a steep premium when they acquired shares in the last year at a much lower price. This premium is reflected in IPO valuations too. The litigations against the company and promoters are a cause of concern. So, is the concentrated risk of company's business. Then comes the competition, not just from housing finance companies but also from other NBFCs that offer home loans and certainly from banks. From an investor standpoint, there is no dearth of listed companies in the housing finance space. And if you want to play the housing theme, there are a lot more options anyways. So, it remains to be seen how worthy an option Bajaj Housing proves to be for investors over the long term. As always, if there are positives, there are challenges too. Do let us know in the comment section whether you would invest in Bajaj Housing Finance and why. And with this, we have come to the end of this video. I hope you found this video useful, and if you did, please share it with your friends and family. I'll be back soon with another video. Till then, take care.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.